A lot of you guys are panicking because COVID-19 is causing the market to crash, and if you've got an extensive portfolio in a town, we're going to show you how to stabilize it. Don't try this at home. What's up, ladies and gentlemen? Chuck Kohout coming to you live here with Always Be Closing, powering the Creative Real Estate Club. If you haven't done this yet, it's time to catch the wave. Go ahead, smash the subscribe button, and don't forget to hit that little bell. You'll know every time we drop a new video. Now, today, we're going to talk about some serious big boy stuff. How to control the market. This is not the stock market, and it's not insider trading, and once you reach a certain level, this is possible. Now, I'm going to leave a little bit to guess here, but I have not done this. Anyway, the way that you can control the market is really pretty simple, and in order to do that, you have to know a little bit about how properties are valuated. So, most real estate investors are going to stick to specific towns, neighborhoods, even counties, and they only want to buy in a certain area because it just makes it easier to manage the properties. And once you've got an extensive portfolio, if everything's just in one town, trust me, it's a lot easier than driving all over the state. We've already been there and done that more than a few times. So let's get into it. If you've got your standard 3-bedroom, 2-bathroom house, and that 3-bedroom, 2-bathroom house is worth $300,000, the way that that value is determined is by an appraisal or by pulling comparables, or what's called comps for short. Comparables are what are properties that are very similar sold on the MLS in 1 square mile. So if you've got a 3-bedroom, 2-bathroom house right here, and somebody goes through it and takes pictures of everything, in 1 square mile, an appraiser or a good realtor, there are very few of them out there, will go outside of that house in a spiral and look for similar houses that are 3 bedrooms and 2 baths in 1 square mile to determine the value. And then they will look at the pictures and at times even visit those houses. So here's your 3-bedroom, 2-bathroom house. There's one over here, 6 blocks over to the right, that sold for $300,000. There's one over here, 3 blocks to the left, that sold for $250,000, and there's one 3 blocks south that sold for $350,000. If you take the average of those 3 houses and then divide it by 3, it's $300,000. Your house is worth $300,000, give or take. The bank most likely will not loan you any more than $300,000 to purchase that property. So without those sold comparables, and they have to be sold in the last 6 months, that house is not worth that much. Now, here's how you control the market. Once you have an extensive portfolio in a town, whether your properties have mortgages on them or not, if they're owned in an LLC, and you're buying your standard 3-bedroom, 2-bathroom house, and I know this is going to be controversial, you can take those 3 houses that you own, paid off or subject to, and sell them to different entities, be it land trusts, LLCs, or people, for whatever price you want. So if you take this house and sell it to this LLC for $600,000, and then take this house and sell it to this LLC for $650,000, and take this house and sell it to this LLC for $550,000, holy shit, your $300,000 house is now worth $600,000, and the fucking data justifies it. Now, you can also do this in reverse, and you could take those properties and play the nutshell game and drive that price down as low as you want and create your own short sale comps. Now, I'm going to say I am not a lawyer, nor have I tried this, but I have seen a number of people do this successfully over the years. It is a way to control the market and the price. I know a lot of you guys are panicking right now with COVID-19 because you have these big portfolios, and this is actually a way for you to stabilize the market in your town. Now, you are going to have to pay transfer tax unless you're doing it in land trusts, and you might even have to pay a realtor's commission, but I think once the realtor, if they're logical, realizes that you're just selling it to different things that you own or control, they'll take less of a commission. They don't really have to do shit. And whether they're subject to or owner financing, the financing is already in place, so you don't need a mortgage broker. My name is Chuck Kohout. That is how you control and stabilize your market, driving prices up or down. Always be closing. Don't try this at home. Bye for now.